Hi, I'm Devang Mehra, the senior partner at the Financial Analyst. In the last module, we covered the bullish engulfing candlestick pattern, and today we'll be covering something called the bearish engulfing candlestick pattern. It is the complete opposite of the bullish engulfing. Just like the bullish engulfing, the bearish engulfing pattern is a reversal pattern which shows that prices have risen a lot and a reversal is imminent and prices are going to fall in the future. So let us get into it. A bearish engulfing is a two candlestick pattern. Prices have been rising. There has been a good increase in the prices, and at the top of the uptrend, we will see a small green candlestick. This is nothing but the peak of the uptrend. It can be a minor uptrend or it can be a major uptrend. So, after a small green candlestick, it will be followed by a very large red candlestick or a bearish candlestick. And this red candlestick will totally engulf the previous day green candlestick. This shows us that the sellers are back in control and the prices are going to fall in the future. So prices rise. At the peak of the uptrend, we see a green candlestick, and the next day it is totally encompassed by a red candlestick, and prices fall. So let us study the characteristics that we already discussed. The candlestick real body of the previous day, of the first day, will be green in color, and the next day it is overshadowed by a red candlestick. Prices have been rising constantly, even if it is a short term or a long term uptrend. The color of the first candlestick, it is similar to that of the previous one. So as we've discussed, the prior uptrend has been up. So the previous candlesticks must have been green. So the first candlestick is generally green in color and it is followed by a red candlestick which is opposite in color. So we'll just study the charts right now and then get into some signal confirmations. So if we see over here, this is a chart of Tata Consultancy Services, the daily chart of 2018-19 December. Prices have been rising from late November, and we see at this levels there is not much strength in the uptrend. And at the peak of the uptrend, we see a very small green candlestick, which is the same color of the previous day, as we discussed. And the next day, it is followed by a red candlestick, which totally overshadows the green candlestick. So the first condition is there has to be an uptrend. Number two, a small green candle totally engulfed by the red candle and prices will start to fall. One thing we need to note, the volume has to be very high for a signal enhancement or a reversal to occur. And we have seen on the engulfing day, volume is very high as compared to the previous days. So I could have easily sold and I could have got a good amount of profit. The confirmation and enhancements, a small real body, the small green colored body is engulfed by the larger one. As simple as that. Number two, as we already discussed, large volume in the engulfing day will increase the chance of a reversal. If the engulfing body, which is the red body, sorry, is engulfing only the body of the previous day, that is fine. But if it is also engulfing the shadows, then this shows it is a greater probability of a reversal coming. So as we have seen in this example, not only the body is being engulfed of the green candle, but also the shadows. I'll just zoom it for you. Also, the shadows have been engulfed by the red candlestick. So that shows a greater probability. Number one. Number two, volume has been very high, which also is confirming the reversal. So I'll show you another example of Vedanta of May 2019 on the daily charts. Prices have been rising. So prior uptrend has been established. At the top of the uptrend, we see a green candlestick and it is totally engulfed the next day by a red candlestick and prices start to make new lows. And this candlestick is not only engulfing the body but also the shadows of the green candle. So this is a very good example of a bearish engulfing. The volumes have been very high, which confirms. Also, we can see over here there has been a minor uptrend, green candle, totally engulfed by the red candle. Prices start to make new lows, and the volume has been very high. And this candle is also engulfing not only the body but also the shadows. One thing I want to add before I wind up is how can we take a trade since you know the bearish engulfing and the bullish engulfing. I've illustrated how to take a trade in this example. We could have easily sold our share over here as we've discussed earlier at the bearish engulfing candlestick. So we could have sold the share here, prices start to make new lows, and at the end of the downtrend, we see a bullish engulfing, which is nothing but a red candle being totally engulfed by a green candle, which we discussed in the previous video. So we could have sold our share here and we could have purchased the same share over here, and prices start to make new highs. Let us discuss another example. I am going to move to different markets now because I want to establish that technical analysis can be used across all markets and all time frames. So we are actually looking at the stock of Microsoft in the Nasdaq in US. So, so if you see over here, this is 2018 March. There has been a prior uptrend, not a problem. There has been a small green candle at the top of the uptrend, totally engulfed by the red candle. Prices start to make new lows. We could have easily sold our share over here after the confirmation, and we could have purchased it right over here because this is a bullish engulfing candlestick as we have done earlier. A small red candle, totally engulfed by a green candle. Prices start to make new highs. We could have sold our share over here, bought it back again over here. Prices start to make new highs. We could have sold our share over here again because this is also a bearish engulfing pattern. A small candle engulfed by the red candle. Prices start to make new lows. So that is how we will be taking trades based on only two candles, bullish and the bearish engulfing candles. So you can use this while practicing with the market, but I suggest hold on for a while, study the indicators and oscillators and the other candlestick patterns so you can use them all in conjunction and get a better result and minimize your risk. Thank you.